Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on Nigeria's fourth quarter 2020 GDP and January 2021 inflation numbers. Last week, the National Bureau of Statistics published Nigeria's fourth quarter 2020 GDP and January 2021 inflation numbers. Nigeria recorded a surprise 0.11% year-on-year real GDP growth rate in Q4 2020, showing that the country is out of the COVID-19 induced recession after 2 consecutive quarters of negative GDP growth. This brings the full year 2020 real growth to negative 1.92%. The GDP tracks how an economy is doing and measures the value of all goods and services produced in an economy in a given period of time, usually a quarter or a year. This report uses the output or production approach to take into consideration the increase in the price level of goods and services. The nominal GDP numbers are adjusted for inflation to arrive at the real GDP figures. This implies that a sector can grow in nominal terms, but when adjusted for inflation, there may be a decline or contraction in the value of goods produced in a sector. By broad sectors, the non-oil sector, which is 94.1% of GDP in Q4 2020, came to the rescue with a growth rate of 1.7% relative to negative 2.5% in Q3 2020 and 2.6% in Q4 2019. The oil sector remains subdued, declining 19.8% year-on-year in Q4 2020 compared to negative 13.9% in Q3 2020. This can be linked to the OPEC Plus oil production cuts, which capped Nigeria's oil production at 1.6 million barrels per day in the fourth quarter. Nigeria's GDP is grouped into 3 broad sectors: services sector 54.3%, agriculture 27%, and industry 18.8%. These sectors grew by 1.3%, 3.4%, and minus 7.3% year-on-year in Q4 2020 respectively. Obviously, the agriculture and services sector boosted the overall GDP growth in the fourth quarter. The agriculture sector's improvement, the largest employer of labor, came as a surprise despite the lingering distribution bottlenecks. However, this may have been boosted by the CBN's intervention funds and late harvest due to delay in planting. For the services sector, the CBN and federal government's targeted facilities to the SMEs would have supported the growth in the services sector. The top 5 performing subsectors by growth in Q4 2020 are quarry and mining 48.4%, telecommunication and information services 17.6%, cement 6.6%, broadcasting 4.4%, and crop production 3.7%. The bottom 5 subsectors were oil refining minus 56%, air transport minus 51.7%, coal mining minus 23.2%, and crude petroleum and natural gas minus 19.8%. With this positive surprise in Q4 2020, we expect the CBN to sustain the rise in interest rates and possibly raise the benchmark interest rates (MPR) at the next MPC meeting to signal a hawkish stance. Moreover, the CBN needs to make necessary adjustments to the Naira to increase FX availability and reduce the gap between the official and parallel market. The fiscal authorities should work to sustain the current momentum in supporting the economy to grow beyond the population growth rate of 3% for inclusive growth. This should also be positive for the equities market, although rising interest rates could affect performance. Notwithstanding, we believe the market should rally as full year 2020 results and corporate action begin to trickle in. More attention needs to be placed on the manufacturing and trade sectors, which dipped by 1.5% and 3.2% respectively due to their ability to generate huge employment. The major cause of the drag in these sectors can be attributed to FX illiquidity challenges aside from the impact of COVID-19. With expected improvement in oil demand, Nigeria may be able to increase its oil production, hence boosting growth in the oil sector and in turn overall GDP. Now to inflation, which measures the changes in the general price level of goods and services, a rise in the cost of living. January 2021 inflation came in at 16.5%. 0.47% year-on-year, rising for the 17th consecutive month and the highest since April 2017. The reality is that your 100,000 last year, January 2020, is worth just 83,530 naira now. On a month-on-month basis, that is comparing January 2021 to December 2020, inflation slowed to 1.5% from 1.6% month-on-month in December 2020. Food inflation spiked to 20.6% year-on-year, while core inflation rose to 11.9% in January 2021. As a result, you need to increase your risk appetite to bridge the gap. The fixed income yield environment has increased in the last few weeks, with the 364-day Treasury bills closing at 4% at the last auction from 2%. We expect the closing rate to improve at this week's auction. Also, FGN short-term bonds have increased from an average of 3% in December to an average of 7% in February. This will positively affect the returns of the money market and fixed income mutual funds in the coming months. You can decide to invest directly in Treasury bills, FGN bonds, or in mutual funds rather than leaving the funds idle in your bank account. There are banks and investment outfits that collect as low as 100,000 naira for investment in Treasury bills and bonds. For investors with a higher risk appetite and longer investment horizon, funds can be allocated to the equities market in stocks with dividend yield of above 8%. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.